The macro backdrop is positive for equities. You've got solid jobs growth, you've got inflation easing and below consensus, you've got a Fed that wants to cut. So that to us says you want to keep running long equity risk.
Gina Martin Adams parses down the income statement. She sees solidity. She's worried about revenue shortfall. If I have a 5% Q2 nominal GDP, how do I have a revenue shortfall?
Probably unlikely. I think that the biggest risk in the back half to me would be, even though 5% sounds high from a nominal perspective, compared to what we had a year or two ago, that nominal number is lower. And I think the question is, in a slowing nominal environment, do we see downward pressure on margins? But look, big picture, I think the earnings outlook looks pretty strong. 12-month forward EPS is like $260, which is a very big number. So look, I think the earnings outlook is still pretty solid. The challenge is that the expectations around that earnings outlook are quite high. And if you look at this quarter to date, 46% of companies have traded up on earnings. Historically, that's like 52. So less than half of companies are trading higher on their earnings prints, I think, which tells you how high the bar is this quarter.
Tom Stewart's got this great stat here. I'm just looking at it. SPX yesterday had its first 2% down day in 365 trading days. So, I mean, that goes to the strength and consistency of this market here, which I guess is even more amazing in the context of the Fed's been raising rates. It's just what happens when the Fed starts really cutting rates?
Yeah, it's been really impressive, Paul. I think part of that is just the fact that you sort of clipped the tail off inflation, which helped. A lot of people are blaming vol selling and sort of all these systematic strategies that are fundamentally supporting the market, and I think that's probably partially the case. There's a flip side to that coin, though, right? Coming out of yesterday, the size move we saw in the S&P means like volatility target funds are going to sell about $75 billion of equity over the course of the next couple of days. So the question is, yes, we've had a very low volatility rally. Now that we've broken out of that range, the test is going to be, have we broken out of the range, and do we end up a little bit untethered, or do we get a strong GDP number and we solidify ourselves?